Hello, everyone. Welcome to the Solution Nation podcast. I'm David Wanatik. Very pleased to introduce our guest today. Our guest is Craig Weiss, Managing Partner of Flagstaff Ventures. Hello, Craig. Thank you for joining us today.
Thank you for having me on the program.
Sure. So tell us a little bit about Flagstaff Ventures, the size of the fund, the focus of the fund, what you seek.
Yeah, so Flagstaff Ventures is early stage consumer. It's a venture capital fund. I launched it in the Q2 of 2021. And so we're at 8 portfolio companies now. Typically, we're the first institutional check into the company, not always, but I would say the majority of the time. And, writing checks, between, let's just say at the low end, 100K, and at the high end, low 7 figures.
And I'm not sure if I missed it, but what's the size of your fund?
Yeah, so the fund one, which is closing in June of 2022, is probably going to end up somewhere around 7 to 10 million, and then fund two, which we're launching thereafter, we're targeting in the $50 million range for fund two.
Okay, and what's the minimum investment that you'll take on to put into the fund?
I mean, the PPM says $1 million. For the right investor, I have discretion to accept less than that.
Okay. All right. So you talk about consumer-oriented companies. Are there any segments within the consumer space that you're most attracted to now?
Well, I mean, in general, my thesis stems from this idea that if you can build a premium consumer brand, some of the standard kind of 5 to 7x EBITDA multiples, for valuation no longer apply. And I learned this lesson, personally as an operator of an early stage consumer company. I was the president and CEO of this company called Enjoy. And, I ended up raising $200 million in private equity for that company. We hit unicorn status in about 3.5 years. So it was a really kind of a wild ride. And along the way, I learned that even with negative EBITDA, we could raise money at, a $1 billion valuation, which you can only do if you've not only have a great growth story, but you also have to have not just a consumer brand, but a premium consumer brand. And so learning that lesson and being successful at raising that capital, I realized that there was almost an arbitrage opportunity in investing in early stage companies, because again, you're not subject to this standard valuation that you see in more mature companies. If you can land a premium consumer company or help create a premium consumer brand. And so I was in a unique position. Not many venture capitalists have built unicorns as operators, and so I wanted to bring that operator mentality to this space. And what's been really exciting is one of my very first investments also is now a unicorn. So I used to joke that as a first-time fund manager, my claim to fame was that I built a unicorn. But a clever person might say, okay, yeah, but do you know how to find unicorns? That's a different skill set. But now I can check both boxes. So for me, what I found is most institutional investors don't truly understand consumer. It's a different animal. It's a little more complicated. They get nervous about building a brand, or if it's a physical product, inventory or distribution, or marketing. And so having done all of those things, with my company, we manufactured 80 million units of a relatively complicated product and distributed those 80 million units in 130,000 retail locations across all 50 states and most of Europe, and ran commercials during the Super Bowl in various markets, billboards in Times Square, double-decker buses in London. So having built an international brand, I'm not daunted by the challenges of helping portfolio companies build their brands, help them with manufacturing, distribution, R&D, all of the things that I learned how to do in my capacity as an operator.
So you invest in very early stage companies, and you put relatively little money into those companies. I'm not sure if that's part of larger rounds or if you're the solo investor in a lot of these fundings. but does a lot of the funding go to developing the product, hiring people, or are they at the stage where they can start deploying some of this capital to enhance their brands?
Well, so it's really on a case by case basis. I would say typically, the majority of these companies are positive revenue companies, and so they have a customer base, they have revenue, and they're growing, and they're moving in the right direction, and they need some growth capital to really be an accelerant to their growth trajectory. And part of my thesis is that getting companies from hundreds of thousands of dollars of revenue, or even a million or 2 or 3 million in revenue, to $100 million in revenue, which that might sound like a tall task. I actually think that's sort of right in my wheelhouse. And so helping companies sort of get to that level, I personally don't think that's as complicated as what private equity has to do, where they need to try to find these very mature companies that are established, that have a lot of revenue, and then try to figure out how to optimize that revenue even further. That I think is just a more complicated task. I think, in other words, value creation at an early stage to me is easier, because it's easier to say, for example, one of the companies that I invested in, great product, they're in 150 points of distribution. And so I look at them and I go, okay, I got into 130,000 points of distribution. I can help them scale distribution to, an exponent of their current distribution footprint, which is going to have this outsized impact on valuation. It's harder to do that with a mature company that more or less has a saturated sort of distribution currently. And so then the only way you're going to really increase profits is by cutting costs, or by, trying to expand into some totally different new market. So most of my companies are really at an early stage of distribution. And so increasing that, which I can help them do by helping them learn how to create that premium consumer brand, so I would say it depends on the company. So far, there have three of my 8 portfolio companies I invested in pre-revenue, and the other 5 were post-revenue. So, early stage to me could be pre-revenue as well.
Okay. So do you look for companies that serve niches rather than broad scale markets? Again, there's little money that's put into these companies. Advertising and building a brand is extremely expensive. So I would imagine that you find niches to invest in where that advertising dollar can go further.
So it's funny, I don't think of it that way for a couple of reasons. I think when people think about early stage consumer, they might think about marketing and marketing dollars. But actually, I don't think about it in that way when I think about building a brand, for a couple of reasons. First of all, before you would ever do any marketing, you need to achieve meaningful distribution. And so now, obviously, achieving distribution with a digital, product, like, for example, an app or a service, as opposed to a physical product, well, it's much easier to get distribution right digitally than it would be physically. But with respect to the physical products, you don't really do any advertising until you've achieved distribution, because why would you advertise a product that no one can go to the store and buy? So really, distribution has to come first. So for some of these companies that I've invested in, I actually don't expect them to spend any meaningful marketing dollars, for quite some time, maybe 1 or 2 or 3 years, depending on, the progress that they're able to make in terms of manufacturing, product development, distribution, and, the early consumer traction that they have.
In some industries, when you sell food to a grocery chain, for example, there's pressure on the manufacturers to have certain advertising budgets, or to pay slotting fees, or to run promotions or taste tests or something like that. So there is a requirement to invest quite a bit in that scenario. But I guess you search for scenarios where there's not that pressure on an early company to pay slotting fees, or to allocate a certain amount of money to
Well,
advertising.
no, I'm not opposed to that. I mean, one of my portfolio companies is, it looks like they're about to get into about 30 or 40 stores in the Whole Foods, chain. And so that one, one of the things when I talked to that CEO, I encouraged her to make sure that that's a successful pilot program, even if that means spending marketing dollars or handing out free samples or doing kind of some guerrilla marketing in the areas of those 30 or 40 stores, because you want to, to your point, you need to support the decision that the chain's made to, make shelf space for you. But also, you really want great data around the pull through that's going to occur in those 30 or 40 stores to show a big chain like Whole Foods why they should be taking you national.
Mhm. Okay. Um,
I mean, I would say, one of the value adds for me, there's a cliche that I hear with a lot of institutional investors, and I experienced it, on the other side of the table as an operator. And the cliche goes like this: oh, we're more than just capital. We're value add. We're strategic, partners, and we're going to help, beyond the capital, make, great introductions, and we're going to, help you run your business. And, in my experience, it's just not true. An overwhelming majority of the time. I mean, it might be 95% of the time. It sounds good, but it's not backed up by actions. And that was often my experience on the receiving end of that capital, where I was hoping for more than just capital and didn't receive it. And so one of the reasons why I started Flagstaff Ventures was to actually make good on that promise that I had heard, and felt like it was an unfulfilled promise for me personally. So I really want to add value to each one of my companies beyond the capital, and there's a couple of ways for me to do that. One is really trying to become a partner with the CEO to have conversations about strategy. In my view, I really try to leave the tactics to them. I don't want to get into the weeds in terms of operationally. I think I can add a lot of value in strategy. And so helping CEOs, either avoid the mistakes that I've made in the past, or, or get the benefit of some of the, good choices that I was able to make, and so that they can replicate that. Because when you're doing this for the, oftentimes the first time, some of my CEOs were previously CEOs, but most of them, this is their first, kind of rodeo, as they say. So the challenge you have is you don't know what you don't know. And so having somebody like me who can basically say, hey, listen, you need to watch out for this, and this is an area that bit me, or, these are the things that you should be focused on, because I can I'm able to see, 3 months, 6 months, 12 months ahead. For that it might be a little harder for them to see. And so I can give them some counsel in that regard, and also help them position their company and their story for, the next fundraise at what will hopefully be a much higher valuation.
so I would imagine you do some of that value added advice through your taking a board seat on your companies.
Yes, and that's, I do that, but it's not always formalized in terms of a board role, in the sense that I, you know, I really want to. So, I mean, for example, I have a CEO, one of my portfolio company CEOs, calls me almost every day, and they're not long conversations, but it's just, hey, this is what's going on. This happened. What about this? What do you think about that? And so it's just a frequent exchange. I have another where we've got a standing Zoom call every month. I have another one who just kind of calls me every time something comes up, and that's just, random. And so, and then others I'll kind of reach out to check in on. And I don't want to be a burden to any of my CEOs. I really just want them to know that I'm available as a resource. And hey, do you want to, bounce anything off of me?
So as far as getting your company's products into stores, what is your stance on the role of distributors or middlemen or introducers that help get products into stores? Do you try to avoid them? They take some margin, but they might be successful, or is it kind of an ad hoc decision process?
I mean, I view the middlemen, first of all, it's always sort of, to me, first of all, it's a case by case basis. So it depends on the situation and the circumstance. It depends on the quality of the middleman. I feel like a lot of middlemen sort of, they often tout how amazing they're going to be, and they rarely live up to that hype. In my view, I'm a huge fan of using their confidence against them in terms of creating a success based compensation metric. Like, oh, listen, if you're going to get me into all these stores, great. This is the reward you're going to get when you get me into all these stores. And then what do? Oh, well, I'm not going to get you into all of those stores. Well, you just said you were, so they kind of can't have their cake and eat it too. So I try to structure those deals in a success based way, and they're typically really relevant only at that initial phase of achieving initial distribution, and they're not obviously as relevant as you scale and you have your own sales force, perhaps, and the ability to achieve distribution on your own.
So you structure the contracts with the middlemen to the extent you use them is they get paid on the initial introduction or initial pilot, and then you stop paying them when they expand beyond the pilot.
Well, in other words, I believe in rewarding people for what it is that they brought to the table. So if they're achieving initial distribution, they should be rewarded for that. When it comes to, like, for example, repeat orders, that they're not really responsible for the repeat orders. The quality of the product is responsible for the repeat orders. So I would try to cap the compensation based on initial distribution. And again, there's plenty of retail distribution outlets available. They can keep expanding and expanding and expanding. But I view the middleman's job is to get you in the door, and then it's your job to make sure there's pull through the system, because you've either created a great product, or you've got great, and or great marketing behind it.
Okay. All right. So now let's say your product's in stores. Is there anything that you can do to help your companies as far as navigating the supply chain challenges that so many companies are confronted with now?
Yeah. So, we obviously, I didn't have a situation where I was manufacturing in the middle of a pandemic, with my previous companies. Although I have a company that I'm involved with now that does, deal with manufacturing physical products, and has had some issues with the supply chain. And what I would say is, obviously it is what it is, right? There's no magic wand or silver bullet to solve some of these critical problems. I would say, as best as one can, you want to try to, avoid catastrophe. So, to the extent that you can line up multiple suppliers, to the extent that you can have backup material or backup inventory, or try to get ahead of things. We used to joke that, one of our largest distributors was McLean, this Berkshire Hathaway company. At the time, it was a $30 or $40 billion company. They were the 800-pound gorilla, and we used to say we have one commandment, which is we can never be out of stock with McLean. We can never be in a scenario where they issue us a purchase order, and we get the PO and we can't fulfill it. That's just that's a death knell, because they'll drop suppliers that they can't rely on. So sometimes that means putting off or delaying a customer from even giving you the PO, because you don't want to be in a situation where you can't fulfill it. So some of it's timing, some of it's just tactics about putting yourself in a position where you don't have to go out of the stock, or you push off some orders so that you don't. You need to, unfortunately, not all customers are created equal. Some are more valuable than others, and you want to prioritize the valuable ones if you think you're going to have an issue with respect to fulfilling demand for the product.
Okay, so maybe some of your portfolio companies could experience a bump in revenue as the supply chain gets worked out. They may not be able to fill orders now, but maybe they'll be able to fill more orders as the supply chain becomes more relaxed. Are your companies too small to use supply chain software, or do you believe in supply chain software, or you think it's overkill?
I mean, for my companies, what their stage is, it's overkill, and it probably does more harm than good in terms of, a lot of those, like ERP systems, for example, just kind of bring even larger companies to their knees. And so it's one of these things where it's a big mistake that a lot of CEOs make because they hear the pitch or they hear the speech about how valuable and how much efficiency you're going to get, but they never factor in the catastrophic inefficiency of the transition onto that new platform or system and the learning curve and just how expensive it is, and you're going to need consultants and you're going to need all sorts of people to get everybody up to speed, and it can be crippling to a company. So I don't recommend it for early stage companies.
You mentioned Warren Buffett. Warren Buffett once said something like, when he was told that Coca-Cola was going to make a huge investment in supply chain software, he said, "Oh, great! Now we're going to know when the soap in the men's room runs out." Uh, so, anyway, well, at some point, your companies are going to advertise and enhance their brands. After they get some distribution to grow bigger. Um, do you want to talk about any metrics you use to determine how wisely your companies are investing their marketing dollars, or any channels that you think are better than others? Do you like social media more than traditional media?
Well, I mean, there's a famous expression with traditional media that half of your money is wasted. You just don't know which half. I think in terms of traditional media, I reserve that only once you've achieved national distribution. And if you have national distribution, then some national media spend becomes economical from just sort of because there's some economies of scale of going national as opposed to marketing or in a more local way. But I think most of my companies are probably more focused on digital customer acquisition, via sort of via social media or Google ad spend. And for that, there's a lot of people who know how to do that really well. And ultimately, it's kind of math, right? You just sort of, what's your cost per acquisition? What should you be willing to spend? What's a customer worth to you, both in terms of the initial transaction as well as the LTV, and that lifetime value is often, somewhat hard to calculate because it depends. Do you have a subscription business? Do you not have a subscription business? What should your expectation be for repeat purchase? But ultimately, the e-commerce sort of type of companies that are acquiring their customers via, social media acquisition, you really got to know your math, right? And know what your cost per acquisition is, because if the math doesn't pencil out, you're just going to go out of business much faster, the more you spend. And the converse is true too, though. If the math is that you can acquire a customer for $5 and they're worth $10 to you, turn up the volume, right? You should be doing that all day, every day.
I would imagine that you can help your portfolio companies because, at least informally, you're learning about what works, which kinds of campaign works, for different media outlets, and you can advise the other companies to do or not do those
Yeah,
campaigns.
there's a lot of what I call cross pollination between my portfolio companies, and that's one of the things that I've really enjoyed about being a venture capitalist is that sort of the rising tide lifts all boats. If one company's figured something out, that knowledge gets to get applied. I absorb that knowledge and then I can give that advice, or hey, listen, one of my other companies, they really figured out this really cool vehicle for acquiring customers or whatever, and then I can share that knowledge across the platform.
Mhm. Do you have a stance on the role of influencers? Do you think influencers that are popular in their niche are good to work with, or not?
It depends. It's a case by case thing. I've had success personally with influencers with some of my companies, but I think I think with influencers, there's a tendency um, to have sort of outsized expectations for the impact that they're going to have on revenue or traction, and so I would say you want to assume that they're not going to perform. And is this the deal that you'd be happy with if they deliver 1/10 of what you think they're going to deliver? Like, at what point does this deal make sense or not make sense? And like with the middlemen, I prefer to make those types of arrangements as a success based, or metric driven relationship. So you want to, for example, contract for a defined number of posts on social media or other things. So you kind of know what, you know what you're getting for your money. And again, it's hard. I often see that a lot of companies think they're going to be making a lot of money from social, from a social influencer, and then it doesn't work out that way. So I have a healthy amount of skepticism going into a conversation like that. Not that I wouldn't do it. I have done it and I would do it, but just from a place of it's probably not going to work out as well as you hope.
Do you have any strategies or any general advice you give to your companies to enable them to raise prices? There's a lot of inflation in the economy now, and many companies have to raise their prices. Do you recommend that they raise their prices incrementally, frequently, or seldom increase their prices notably?
Well, I mean, everything's sort of on a case by case basis. I mean, there's a little bit of cover for a company to raise prices today since sort of everyone's doing it. So it's not like going to come as a shock. And if you just explain it, appropriately to your customer base, no one's going to be like, "What do you mean there's a supply chain problem?" I mean, everyone knows there's supply chain issues, right? So everybody knows that labor costs have gone up, right? Everybody knows that certain, sort of core materials have gone up in price. So those things aren't going to come as a shock to anybody. But I would say in general, because I'm focused on premium consumer brands, none of my companies are sort of truly competing on price. I always say if you compete on price, it's just a race to the bottom. So one of the nice things about being a premium consumer brand is, I like to invest in companies that are the most expensive in their category. And when you're the most expensive in your category, it's not, as catastrophic, right, to raise prices. If you're competing on price and you raise prices, then you don't have any value, right? Because your whole value proposition was you were the cheapest, and maybe now you're not. So, but if you were already, sort of hanging your hat on the fact that you were premium, it's not devastating to raise prices if necessary.
Okay. Is there anything that you look for in a business model? Is it like repeat customers, recurring revenue, customer lock-in, anything like that?
I mean, look, you want to see some evidence, ideally, of loyalty, and that loyalty could be in the form of subscription. It could be in the form of repeat purchase rate. It could be, there's lots of ways for that to get represented. I'm not a huge fan of companies that sell products that a customer kind of only needs to buy once. So, for example, I can't get excited about like the online mattress companies, right? Like, they've built big businesses, but I don't like the idea of selling. How often are you buying a mattress, right? And it's the same thing with selling, I don't know, like a car. How often are you buying a car? I mean, I just don't like products that you just don't need very often. And so I prefer products that, even if it's not a subscription model, there's a repeat purchase rate, or you have customers who are going to buy your product over and over again.
Mm-hmm.
Because
I
otherwise,
guess
you're in a situation where you're always having to acquire new customers. You're always going to have this customer acquisition cost. And I think it's okay if that's, you always need to acquire new customers, but in an ideal world, you don't, that's not 100% of your customer base.
Right. So my understanding of Flagstaff Ventures is it's sort of bifurcated. You invest in American companies and Israeli companies. So we're most interested in the Israeli companies at Solution Nation. So maybe talk about the challenges or benefits of seeking Israeli companies from Arizona.
Sure.
I know you're Israeli and you go to Israel quite often, but you feel you might miss some opportunities, or you feel like you have a better perspective by having some distance?
So, here's my thinking on it. I live in Arizona, although I have dual citizenship and I do go back and forth frequently. What I would say is this: there's so many Israeli companies that are great at tech and they're great at digital customer acquisition, and they've got some really strong entrepreneurs in Israel. There's a ton of venture capital in Israel, but it tends to be focused on SaaS and fintech and cyber and deep tech. there really, to my knowledge, isn't really any venture capital fund that is its primary focus is consumer. And so, what's interesting about that is any really serious consumer brand coming out of Israel, their market isn't in Israel. There's just not enough people there, right? So their market is typically going to be in the United States if it's a premium consumer brand, also Europe and other places. But the U.S. is the number one consumer market really in the world. And so I think that for Israelis, they see me as a bridge to their marketplace here in the United States. Not only do I, speak Hebrew fluently, and I lived there for 4 years, but they don't know any other Israelis, for lack of a better word, that have built unicorns in the consumer space. So I have some credibility when it comes to helping them position themselves, and because I've raised hundreds of millions of dollars at very high valuations, I can help coach them through the fundraising process and how to position themselves to be able to hopefully one day achieve unicorn status.
So, most people know that Israel has great technology, great scientists and engineers. How would you rate their marketing and brand building abilities?
So I think this is one of the areas where Israel has fallen short. There's a stereotype of Israelis and Israeli entrepreneurs and Israeli companies that they're really great at their technology and they're really poor at telling their story. It's a sweeping stereotype. It's, I'm sure, not true 100% of the time. It's the issue though is I have seen it quite a bit, and there's this lost art, I think, of storytelling, and telling your story in the right way to whether that's to elicit desire in the mind of a consumer or elicit demand in the mind of an investor. There's a way to position your brand and your company to tell that story in a compelling way, and I think I've figured out how to do that along the way, and I'm happy to share that knowledge with the companies that I'm talking to, and even ones that I don't invest in. At the end of the day, I'm a committed Zionist. I want to see Israeli companies do well, and even if I'm not the one who's going to invest in them, I'm happy to see them be successful.
So I would imagine that to the extent there is a bit of a deficiency in Israel's ability to do great marketing, that's offset by having great advisors like you, or going to accounting, advertising agencies, getting some consultants or what have you to assist. The other thing is that for those who don't know, Israel is a very cosmopolitan country in the sense that there's people from all over the world there. So the chief marketing director at an Israeli company could have been in the advertising profession for 20 years in the United States or Canada or Europe, and who was later moved to Israel. So sometimes you get new immigrants that have great marketing experience. Do you do anything in a formal way to help lower the advertising costs of your companies? Do you approach advertising agencies collectively on behalf of your companies, or is that not really practical?
Well, what I do that I'm really proud of is I've met some amazing people over the years, and have a pretty cool network of people in that space. I've worked with some incredible advertising agencies. I've worked with some incredible advertising and creative talent. And so, one of those people is a venture partner for my fund. And I basically have all of the funds that are looking to engage a marketing agency or an advertising agency consult with my venture partner just to talk to him. And he ran his own creative agency on Madison Avenue in New York City for 20 years and, had a successful exit. And so my portfolio companies get access to people that they wouldn't normally have access to, that can say, hey, listen, I like their work product, or I think their prices are too high, or, give them feedback from an incredibly sort of high perch where he's, lived that in that world and can say, these guys are good or these guys are not so good.
Mhm. So it's great that Israelis are very entrepreneurial, but some of them are so entrepreneurial that they're the CEO of two companies or sometimes even three companies simultaneously. Is that something that you would accept if it's the right CEO, or do you have a condition that you only invest in companies whose CEO is full-time dedicated to that company?
No, I don't have a rule that would prevent that. I mean, to me, my view is I don't like sort of those hard, fast rules in general. I kind of prefer to make decisions on a case by case basis. I mean, you know, if I went back in time 10, 15 years and I described somebody who was going to be the CEO of multiple companies, big companies, real companies, you just say it's just not possible. Well, the richest person in the world is doing it right now. I mean, so, you know, I mean, I don't think you can make the rules. It depends on the individual. Like, you know, now you might come back and say, well, look, the world only has one Elon Musk. Okay, you know, that might be true, but you know, it's depends on the individual, right? And
Mhm.
what they're capable of.
So, can you tell us to what extent you use milestones when you're structuring your funding of companies?
I do that sometimes, and it's a way to protect, you know, both me as the investor and also to hold the portfolio company accountable for hitting the numbers that they said they're going to hit or hitting the, you know, the milestones that they said they were going to hit. So I have done that a couple of times where I've structured an investment with an initial amount of money up front and then additional capital at my option or at a point where they've hit those critical milestones in 6 months, 12 months from now.
Okay. All right, great. So I understand that you have two Israeli companies in your portfolio currently. You're looking at a couple others. Let's just spend a few minutes talking about the two that you already have in your portfolio. So one is Marble in legal services. Tell us about that.
Yeah, so it's really an amazing company, fantastic Israeli founder CEO Itai Hirsch. The dev teams in Tel Aviv, although the company you know is Itai's in California, and they have lots of employees both in Southern California as well as in Arizona and in other places. And it's this really a new emerging category called consumer legal. And the premise that I think is really captivating is that you know most people don't have a lawyer, but if you get pulled over for a DUI or serve with divorce papers, you need a lawyer. So what's your process for obtaining that lawyer? Well, you either have to go to your friends and family and tell them some private or embarrassing thing that happened to you, or you got to go, you know, go on the internet or look at the billboards or remember their, you know, radio jingle or whatever. And it takes a couple of days. And then when you finally get in front of that lawyer, you essentially have two questions. What's going to happen? You know, how much is this going to cost? And they say, well, we charge, you know, 500 an hour. Well, how many hours? Well, it depends. Well, what's going to happen? It depends. So what Marble's done is that I think is incredible is they've really addressed each of those pain points that, you know, people have gone through when they need a lawyer. And so they have their own lawyers, so you don't have to go out and find one. They have outcome prediction and cost prediction algorithms, you know, baked into their platform. And so they're an app on your phone for hiring a lawyer. And so, you know, it's an incredibly successful company. You know, they're the ones that you know have become a double unicorn since I made my initial investment at a much lower valuation. So it's been a successful investment for me. I'm a big fan of the founder CEO, and I think you know the future is very bright for them.
So they have their own lawyers on staff, did you say?
Correct.
Okay. Okay. So they could recommend their own lawyers or external lawyers that are
Yeah, I
not
mean,
on staff.
I think for now they're really, for the most part, using their own lawyers, and so and they have actually that this is one of the things that I think is really clever about their business model, which is that um, there's a lot of service providers out there, accountants, lawyers, you know, dentists, you know, lots of people where there's a very alluring pitch, which is, hey, you know, in this case with Marble, you went to law school to be a lawyer, you probably enjoy being a lawyer, but do you really know anything about customer acquisition? Do you really want to get involved with customer acquisition? Like, it's not their thing. They're not
Right.
SEO experts, right? They're lawyers. And so they basically say a very alluring pitch. We'll take care of bringing you the clients. You just have to worry about being a lawyer and doing the legal work. Well, we're going to take all of those headaches and distractions and things that you're not very good at and you probably don't enjoy off of your plate, and you just go be the lawyer. So there's a lot of lawyers that are like, you know what, that sounds pretty good to me. Like, I don't mind making a little bit less and not having the nightmarish headache of going out and trying to find clients.
So if I was going to get divorced, how accurate are their predictions as far as how much it will cost and how long the process will be and
I mean, they're
what
pretty
the
good,
outcome will be?
right? Like, in other words, there's a lot of areas of the law that are incredibly transactional and very easily predictable, right? So, like a DUI defense, there's, that happens all day, every day. So being able to make predictions is not that challenging. And same thing with divorce. If you know some of the, kind of right out of the box, like, is it going to be contentious or not contentious, right? But if you're like, no, 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 it's amicable. We just want to get through this in a, simple, clean way. That, yeah, I get very accurate predictions.
How automated is it? So in this example, if somebody's getting divorced, do they upload their assets into the spreadsheet or something that Marble has, or is it more person-to-person discussion?
I mean, there's a person-to-person discussion. You're going to talk to a human being, right? Because at the end of the day, it's not, you're not a machine. You shouldn't have to interface with the machine. They've just gotten good at, the ability to scale that because, like I said, there's areas in the law for which, they're too bespoke or custom for a Marble solution, right? If you said, hey, could I use Marble to sue my 50-50 business partner, in this complicated, corporate structure where there's a buy-sell agreement and, like, no, that you're going to need to go to a lawyer who's going to have to, like, read all of those agreements and get up to speed. But if it's something that's, again, a volume transaction that's occurring all day, every day, that's something where they're really good at.
Can that company go public when it's
Sure.
ready?
Yeah, absolutely.
It could, my understanding is in the United States, it's not easy for law firms to go public. I think in the UK and Australia, they can go public, but the nature of the
So
LLPs and so on.
yes, the laws are actually changing in a really interesting way. So up until almost, I think up until last year, there was no place in the United States where it was legal or ethical for a law firm to either split revenue with a non-lawyer or for a non-lawyer to have an equity ownership stake in a law firm. And those laws are actually starting to change. So ironically, Arizona has been one of the leaders. So now in Arizona, a non-lawyer can own equity in a law firm and a lawyer can split fees with a non-lawyer. And so I believe Utah is now following suit, and I think a bunch of other states are in talks to do that as well. And the reason for that is because of sort of the example I gave earlier. Why shouldn't a law firm be able to partner with an SEO firm that, is really good at digital customer acquisition when that's not really what lawyers know how to do? The same thing's, by the way, happening in the dental space. There's a couple of 100,000 dentists in the United States. And when I was a kid, 100% of them, were basically like their own, they hung up their shingle. They were a solo practitioner. Now, something like 1/3 of all dentists in the United States work for a corporate entity that gives them the same pitch. You went to dental school to be a dentist. Let us handle payroll and admin and insurance and bringing you new patients. And so then they have a fee split arrangement with the corporation. And that's literally become 1/3 now of all dentists in the United States work for one of these corporations. And that number's only increasing. So I think that shift is now coming to the legal profession as well.
I don't know if Marvel has an appetite to expand outside of the US.
Eventually, of course.
Um, are there paradigms where this business model could work better outside of the United States? And, in
It's
the
going to
United States, for
always,
example, with taxes, individual fills out his own tax return. In other countries, you pretty much get a bill from the tax authorities. So I'm not sure if the legal systems are somewhat like that as well, where the outcomes are more predictable and more streamlined and
sure.
less opportunities to make motions and things like that.
Yeah, no, it's going to be entirely on a case by case basis, relative to the not just the legal industry, but also, what are the laws that allow non-lawyers and lawyers to partner, So I think, the UK, I think is in talks to do something that might make that an attractive market for Marble.
Okay. And then the second and last company we can talk about is Modly. Uh, what does Modly do?
Yeah, so Motley's a wonderful company, a wonderful female founder CEO. Half of my 8 portfolio companies are female founder CEOs, which I'm very proud of, and Motley is one of them. So her, I think very clever consumer insight is that for most women, trying on a bathing suit is like the most anxiety-inducing experience of their year, and so she decided to design much more what I would call user-friendly swimwear. So covers more skin, a little looser fitting, and so um, you know when I invested also at an early stage, and they've really done tremendously to grow their revenue, grow their repeat purchase rate, and also to really kind of build their brand and establish that credibility that one of the things they've done a really good job is they've got a great kind of back end and tech stack for figuring out what the future bestsellers are going to be based on consumer purchasing behavior in the past. They're really good at analyzing that data and then integrating that analysis into future designs for sort of next season's selections.
What do they do if the bathing suit is looser fitting? What do they do to make sure it stays on?
Well, I
In
mean,
the water?
obviously it's a sizing issue, right? So that's like with any article of clothing, but there's more skin coverage, so they tend to cover more skin. These are they're not selling bikinis as much as they're selling sort of shorts and one pieces and things of that sort.
Hmm. Um, so they serve an older clientele.
Yeah, I mean it's a broad range. They're not limited to older people, but look, I mean, if you look at just the United States, for example, I think 40% of women in the United States are considered to be overweight, or I think even maybe potentially obese. So the plus size market is one of the largest market opportunities globally right now. So being able to offer sort of more skin coverage is an attractive offering that's only going to become more attractive over time.
They sell other accessories like a shawl, put her over your shoulders and that
Yeah,
kind
no,
of thing.
they've expanded nicely into other areas, sort of ancillary outside of even swimwear now.
I think Zara's business model is they're very responsive to changes in customer behavior and try to predict what customers want and have a very quick turnaround time. But there's some friction, I understand, with Zara in Israel. So was that a serious friction? Could business be done with Zara?
Oh, I don't know enough about Zara to weigh in on that issue. I'm sorry.
Okay, that's all right. Well, anyway, I think I've pretty much exhausted my questions. Is there anything else you'd like to say about your fund, your investing approach, or any of your portfolio companies?
Just that I see the Israeli market is a fantastic opportunity, and I think most people don't think of Israel as an underserved capital market because there's so many VCs in Israel, but I do think it's underserved with respect to consumer. So I think Israeli companies that have a consumer brand as opposed to cyber or fintech or SaaS, don't have a lot of options for who to talk to, who understands how to build a brand, who understands how to achieve distribution, who understands how to raise capital and to tell a growth story, and who understands Israel and Israelis. I'd like to think that we check all of those boxes, and so I'm excited about the companies that I currently have. I'm excited about the ones that I'm talking to, and I think it's a I'm very bullish on Israel in general, and I think consumers are a really interesting niche. Most institutional investors don't understand it; they're afraid of it. They don't have it in their portfolio, and it's a blind spot for them because you don't want to just be in one category like tech, where you see what's happening in the marketplace today. So consumers nice. You've got it's got a longer time horizon, and I think it's not as susceptible to some of the vagaries of the marketplace.
Well, I think you're in a good position. I think Israel is becoming more aware of the importance of marketing. The universities often have collaborations with Western schools, Western MBA
Yep.
programs that focus on marketing. Some of Israel's new industries are very marketing needy, like the food technology. A lot of food technology in Israel, of course, they have to market on a broad scale consumer basis. And I imagine there are some fashion institutes in Israel. Or is that right?
I mean, I know that there's a lot of fashion that's coming out of Bezalel, for example.
Okay. Well, anyway, I think we can conclude the podcast at this point. Craig, it was great having you join us today. We very much appreciate your time and sharing all of your insights. Do you want to tell people how they can get a hold of you if they'd like to speak with you?
Yeah, the best way is just Craig at flagstaffventures.com.
Okay, great. Thank you very much.
Thanks for having me on.